Good morning, everybody. Happy Women's Day to all the women out there. And surprise, surprise yesterday, huh? It was surprising to me the markets went up last week. Actually, I mentioned that in the weekend video in the letter saying I felt like I was robbed out of a great opportunity because I thought markets would go lower down to some support. And now it looks like it's happening. But, this market's been schizophrenic for a long time and news driven and a little wacky. So now we're going to see, what kind of follow through there's going to be. And the damage was done yesterday, whether it could survive from that, whether Mr. Powell comes back and backpedals on his statements from yesterday when he speaks today, we shall see. It doesn't seem likely that he would do that, but maybe he got an earful yesterday. So I'm just looking at our techno fundamentals slide here. This here 13-week, you can see where is it? Well, we'll maybe have to see it in the other slide, but you can see how the dollar ripped up. And of course, that played havoc in currency markets, and all the other currencies cratered as the dollar went up, and that had a pretty negative effect. 13-week treasuries ripped higher. And yeah, Mike, that would be an amazing, Mike is saying, on YouTube there, we get an engulfing bar, meaning it would negate this bar. And as we look at different indices or ETFs, I even mentioned this in the room, like the tech, and held up relatively well compared to, say, looking at the Dow. I'd say maybe that's possible, but I certainly doubt that. After such a powerful dollar bar, the US dollar moving up like that, I just can't imagine that being negated today unless he really backpedaled. And how silly would that be if he did that? That looks like it's got to come up to the prior high, which means gold is going down. You see the oil had a big drop yesterday. We've been talking about this head and shoulders top and whether it could get through this right shoulder. And it certainly looked like it was going to do that. And that took a dive yesterday. You can see the yield curves got even deeper in inversion. And I've been talking like we're in recession. I've said it. So while the normal things that people look at to confirm it maybe haven't been there, but look, tens of thousands, maybe hundreds of thousands of people are being laid off. And while, and we're going to get this jobs report on Friday. I mean, if that thing comes in hot, we might really have some downside explosion going on. Is it consistent for the market to drop when the dollar goes up? That's an interesting question. And that question really relates to all into market analysis, because over time, what you find is that the markets can totally ignore the dollar, totally ignore certain economic reports or interest rates for a period of time. It's kind of like the flavor of the moment, what they're focusing on. And as interest rates go up, they start going up, the dollar goes up. And so the implications of that are many-fold in that, U.S. real estate now becomes less attractive to foreign money because the dollar strengthens. U.S. products become more expensive overseas. So there's always this balance between what's high and what's low and what's trending. So it's not a black and white answer. So, but right now there was this very negative effect. Last week was a very positive move off of a retest of the 200 based on this Bostic's comments, where he on Wednesday wrote that piece about being more aggressive, and then he backed off on it on Thursday, and the markets took off. And now, the Fed chair comes out and says, hey, we'll do it faster. We'll do it more aggressive. Things are hotter than we expected and so on. So, I don't see who's going to backpedal on that. Let's see how things progress today. We talked about the volatility index being down here, but hey, if the markets went up, it could have went lower and it went up. So internals aren't lined up, breadth. And I mentioned this in the weekend letter about typically breadth coming to an extreme here and getting up to zero, the markets roll over. And I had my doubts because of the two wide range bars. And here it is, and sentiment isn't there yet. So no signal there. And so it certainly looks to me like markets have to go lower. Sentiment here has to get down to a bullish extreme. This could get down near minus 300. And then from there, we'll see how things line up for another rally. Okay. So there's 13-week, that spike up, and you can see the to a lesser effect, the 5-year kind of inched up, and the 10-year kind of did nothing. It's down a little bit. So it's mostly about the belief that they're going to raise the Fed funds rate, and now I don't look at the numbers, but maybe they're starting to figure in half a basis point versus a quarter. So for me, not that my opinion matters as far as what they're going to do, of course, but I think it's better to get it over with than keep taking along at a slower pace. And I guess maybe that was Powell's comments too, that he better play some catch up because this inflation isn't coming down. All right. Our routine spiders, where are they at? Probably stabilizing. And you can see where they're at the bottom of the wide range bar. And that's a pretty big, nasty red bar. And they typically don't come back from something like that. And yesterday we talked about these two green bars and buying the dip. Well, and I explained that this coming off of the low. Well, this was coming off of the first leg down. And so now this is rolled over, and look, just based on historical patterns, I think it's got to come down here, but let's see what happens today. All right. If jobs come in hot, then the Fed will raise 25. No, if jobs come in hot, remember, go look in, it was January where they were expecting 200,000 and it came in at 500,000. Okay. They want to see things are slowing. If they see things are getting better, that means kind of like there's the expression pushing on a string, meaning you're pushing, but you're not accomplishing anything. And so what do? Well, somehow pushing harder on a string doesn't work, but just the analogy, but they're going to have to push harder, meaning 20, 50 basis points going back to that. And they're going to have to admit, hey, we thought things were getting better, but they're not. So whether they rigged or not, Mike, nothing we can do about it, right? So it is what it is. And based on whatever that number is, the expectation is that they're going to do 50 basis points. Go back and look at the history of the 70s, how many times they were raising interest rates and nothing. And then, they got more aggressive, and there were other things going on back then, but we don't have time for all of that conversation. Anyway, we'll see where this week ends, but so far it looks like a buy setup failing, which could be a measured move down. So that would bring it down to this pivot at least. But same story, we always do. Let's see where it handles the middle of the range. It came down hard. There's a void. There's plenty of room to get down here. And we talked about this yesterday, about the void. It was at resistance. It's coming in. So far, somewhat possibly of a trading range, minor. We'll see where it all goes. Futures, I'm not going to be doing anything either, just bottom of the range there, doing nothing. They couldn't bounce, right? Who wants to be aggressive? And he's going to be talking again today. Stopped at 4,000. We talked about the open interest in SPX. Big open interest at the 4,000 level. So we'll see how far away that can get away from that. Yeah, I got the same thing written down, Jake, 39.25 for the downside there. So let's see where that is at, which is down near this pivot. And it isn't that far away. So I'm not going to say it's a no-brainer, but you've got the 200-day and this low here. This isn't marked as a pivot yet, but it will be, assuming we don't get another red day down here. So I would suggest waiting 5 or 10 minutes at least and see if things drop and, futures drop, SPX drops early on. And if that's the case, maybe if the juice opens up toward 3,900, which there isn't right now, but initially this morning I was thinking, it'd be great. It'd be a no-brainer down near 3,900, but there's no premium down there. So that isn't happening. 3,920 is now 70 by 75. So that's better. So things must be inching down a little bit. Yeah. Up above, I had written down 4120. Is that correct? 4120? No. That's an old. Where did I? 40 is 80 by 90. And seems unlike, I think, again, it's not that far away. So I wouldn't call any of these no-brainers. I think that's too close, Jake, 40-20. I mean, I think that's, kind of, yeah, it's too close for comfort, and it gets real uncomfortable when it starts getting there. So it might work. Normally it would, just the fact of wide range bar, but Cliff says, Greg, the NASDAQ still has a gap to fill. That gap fill will probably take SPX down to that pivot, most likely. Yeah. The Qs showed a little relative strength. They didn't come down here. And in part, I believe that because interest rates, the 10-year, the 5-year, didn't move up that much. It was all about the short end, the 13-week ripping higher and the dollar ripping higher. And so Techland really was saved by the fact that the 10-year and the 5-year didn't push higher. And, if this starts to come down, it's like, okay, well, which side is going to win here? Because you had like a tag team event, so to speak, between interest rates and the US dollar moving up together. And now you've got the dollar going up because the markets believe the Fed is going to be more aggressive, but interest rates are kind of coming down, which is the idea of stagflation, actually, because interest rates go up for a couple of reasons. A demand for money, right? So you want money, okay, I got it, pay up. And so that means the economy is good. And it goes down for vice versa. The economy is slowing. It also goes up where an economy is slow, but because of inflation, because, well, if I think that there's inflation, I got to get a higher interest rate on my money because it's going to be worth less when I get it back. And so it's not about the economy being good. It's just, hey, there's inflation, so I got to raise interest rates to get my profit. So now that it's coming down, part of it is a positive, maybe because the dollar's going up, they're going to raise 50 basis points. Who knows what after that? Maybe they keep going, and that will slow the economy. So interest rates begin to come down, which is a positive for the inflation thing. But there's still, this is all speculation at this point. Nothing's actually happening. So things moving. And one of my comments about intermarket analysis, well, hey, markets will pay attention to this. I've seen markets being so hung up on interest rates many years ago that on a minute-to-minute basis, they were moving in lockstep with each other. Or I don't know, so many years ago, maybe it was opposing, but it was very tight. And then all of a sudden, that disconnected. Nobody cared anymore. So tech held up relatively well. Still, damage was done, but I had mentioned in the green room that this kind of a pattern is actually something that, and not just because of Techland, just patterns in general. This is a kind of pattern that could actually be survived, but I just don't see that happening if S&Ps keep going down and the interest rates and so on and so forth. So it's just for the moment, it held up better than others did. But it's an observation. And this one was leading the way down the day before. That was a heads up warning. It did stop at support. So that leads maybe to the markets not doing too much, but we definitely want to keep an eye on this. Really, looks like that closes that way. Expectation it'll come down there. Now this really got whacked. Big move to the downside and broke through that little support there. Who's going to want to? Well, look, if you get a bit of a shock pattern, what's a shock pattern? A breakdown failure. If this flips right back up again, we may get some kind of counter trend rally where it comes into this void. But if it can't get through that, just as I say, look to the left. This comes down here. This is where the buyers are going to be, black and white, on a short-term basis. All right. Silver, I got killed with the dollar. Had to happen. Gold got shellacked too. At least it held the low. And this was a bit of a surprise, but we looked at USO, but that came down real hard, still within a trading range. And the transports had to come down as well. But it's good that the oil's coming down for transports. Could have been the other way, but we'll see whether it holds this support or not. So, we got more Powell talk today. I don't suspect he'll say anything different. Who knows what questions will be asked over there in the House, but the damage has been done. So we'll listen to what he says and see what happens today. All yours, Dan.
Good morning. Yeah, I didn't think the market was going to move that much on his testimony because I just thought, what's he going to say? Nope. So I was definitely wrong. It moved all right. So I don't have any alarms going off on any of our positions here, so that's a good sign. So we'll just go through them. So yeah, I did two. We're in this thing F-SLY, and this is actually holding incredibly better than anything else yesterday because look, it held the top 90 whatever 8% of the igniting bar and got a bullish weekly. So that looks great. I did two earnings trades myself. Well, I did three actually, but one earnings is not till after today. I did what's called a short strangle, shorted a 150 call and a 107 put. And even though it's a bullish gap up here, I got $19 of comfort for Friday. So I have no idea where it's going to open, but I just put a bid out there for 20 cents, sold them for $1.42. And I'll be watching that. I shorted the 450 puts on SFIX, and it's gapping right there to 450. And I'll see if I can get a little bounce and just kill it, break even. Let's check a couple other earnings here. Now Hershey, I just heard on the news that they're coming out with some plant-based chocolate now. So I just I just look at the stock anyway. And this is holding up incredibly well. Daily, weekly, monthly. But I'm going to set an alarm at 240. If this can take out yesterday's high, now this is bullish all time frames. Lulu, I posted as a call spread. That's a breakdown. Look at all these converging MAs. Look at all these pivots. All these pivots were false attempted breakouts that closed with topping tails. And then all these flat MAs closing breakdown. This could be a directional short also, but I just posted a call spread for starters. Alta, look at this thing at all-time highs. Little breakdown failure here. So that's on my long list. EDU gapping down. That's a big topping pattern now with a void. So that's a short watch. DC gapping up too much. Yeah, don't that's me. All right, flex. That's something we shorted yesterday. A little sell setup looks fine. WWE could be a day trade continuation short here. You got a big old void. On Netflix, we were watching that as a short yesterday, and it still looks lower. Got a void here. Sky T is bullish. Got a little W retest here with a bullish engulfing, which is amazing relative strength to the broader market. We got a buy setup on the weekly. So that looks amazing. I'm gonna put that in a window. SKYT. Sky W, Sky, was this Sky West, I guess. So nice 180 reversal at resistance with a bullish weekly. That's full of quite the relative strength also. Anything that closes like that yesterday is amazing relative strength. HLF. You could set an alarm at today's Wednesday, Monday's high. Has to take out Monday's high. And then it'd be red bar ignored, breakout, daily, weekly. Crowd we talked about, KC. These are earning stocks now, gapped up to around 215. There's a nice gapper. There's a nice gap. I'll put that here. KC. 10, 15 minute high for a long and also a put spread, 5-minute high. No prints, no pattern. No pattern and gapping down to 1090 gap. Wow, gapping right here to the 200. That's a big gap. Gapping 2370. Gap's too big for me. Oh, talking about gaps. That's today's MT Live. So, we'll see how this Casey plays out. Casey's a beautiful gap setup. MBC. Fairly recent IPO here. I see a print, just one print down here. We'll come back. Yext has been on a tear. That's an ugly gap. That's damage now. So we just got to wait and let the buyers and sellers move around and set up a new reference zone of support and resistance. WTI small gap up, but big trading range. Yeah, Greg Dunn's asking for the link, but Dunn, you can always also get it just right on our website under the education tab at the bottom. We post 2 or 3 ahead on the website all the time. This is a big old gap, but gap into resistance. I would be I'd be selling that pre-market if I were in that. This 880 big gap. Don't like the way it trades. SFix, I'm in that. We talked about small gap up, but still a power downtrend. Arlo 405. Might give you a day trade. Now, ideally, it would gap just over Monday's high, because then my void is bigger. The fact that it's gapping way the heck up here at the 20 MA, the gap's too big. Pattern. Campbell soup. Gap in a 53. That'd be a no-brainer put spread if there's any juice. No pattern, a mess. Not bad. LTH, maybe 30-minute high. No prints. I see one print up here, but I don't trust it unless it's liquid. 28. Wow, well, that's getting its teeth kicked in. Man, and this is an example where selling options into earnings, that's the game you're playing. You're going to make money 95% of the time using our approach. And this is what you want to avoid, the catastrophic gap. Let me see the expected move on this thing. Unfee, United Natural Foods at an expected move of $4. This is just blasting through with, I don't know what. I'm curious what the news is, just because that's such a massive, nasty gap. Like accounting irregularities or type of gap. 16. Okay, here's another nice gap. See, I like them when there's a shock component and it's just gapping over resistance with a void. Now I know, you got this over here, but the fact that it's gapping over this it's a pro gap. It was sideways and now it's going up, provided it holds. So I'm going to put Varix on the bottom right there. All right, so they are getting punished. LFST 560. Here's another one. Here's another shock gap. Now this one's gapping to resistance, whereas KC and Varax are gapping over it. And this other one I wrote down, Sky T. But that's another gap candidate. So you put it in a 5-minute window and we see what happens. Here's a gap breakdown. All right, now it's gap. If it opens at 29, now the gap's too big. That would be my target. 730 Hershey up alarm. Hershey up alarm just went off. MCG 730. There's another gap breakout. Wow. We'll come back to it. IMXI. Strong uptrend, relative strength. All right, so Rengen, this crowd midpoint is 34 cents, even with this big gap against us. 35 cents. I'm just gonna kill it to be done with it. All right, I'm not filled, but I'll just keep an eye on it, but I'm just gonna take the money and be done with it because we made huge gain. But it must be spready because I'm not getting filled. All right, YSG, don't like the way it trades. REVG, big gap. Our Sky W, maybe 30-minute high. AAP, we're short. New low, Q's the strongest, just like they had been recently. All right, so our AAP is doing good. Let's lower the stop. 135.15.